Imagine a race that spans 100 years, where the fuel is not oil or coal, but raw human talent, where the track is no longer a physical road, but the limitless terrain of the global market. In this new contest, the victors will not simply amass wealth, they will fundamentally reshape the flow of money and power. The secret? Those who unite the sharpest minds in artificial intelligence, mobilize patient, forward-thinking capital, and treat the planet as a stakeholder will set the pace for everyone else. The engine of this decade, and likely the next, is artificial intelligence. Visionaries building cutting-edge models, custom chips, and vast data centers are not merely advancing companies. They are laying the backbone of entire economies. The projections are staggering. By 2030, the global AI industry is expected to reach an astronomical $1.8 trillion, fueled by breakthroughs in machine learning, automation, and data analytics. Countries that become homes for these pioneers and the infrastructure they demand will harvest not only rapid productivity gains, but also technological surpluses and strategic tax revenues. The lesson is clear. The table stakes for prosperity have changed, and they revolve around digital intelligence. Capital expenditure in cloud computing has emerged as the new metric of geopolitical might. The managers and engineers who build and run the world's cloud platforms are effectively plugging their nations into a new digital grid. This is not a subtle trend. Industry giants like Amazon Web Services, Microsoft Azure, and Google Cloud are leading a global race, redirecting billions in investment towards the regions that show the most promise. The scale of these investments acts as a barometer for digital demand, foreshadowing the future GDPs that will be driven by digital productivity. Building and connecting data, the very lifeblood of this new era, depends on more than just servers. It requires global connectivity, from undersea fiber optic cables to constellations of satellites orbiting the Earth. For nations, attracting these data architects means exporting digital infrastructure and importing a steady stream of innovation royalties. Every new cable, every additional data center, multiplies the value of all industries, turning data into the new oil. At the heart of this transformation is the way money itself moves. The architects of digital payments and currencies are laying the rails for the 21st century economy. India provides a compelling case study. Its public digital payments infrastructure, DPI and UPI, has slashed transaction costs and drawn millions into the formal economy. Where technical talent meets clear regulation, the digital GDP surges. The lesson from India is unmistakable. Build the rails and the trains of commerce will come. Central bank digital currencies, or CBDCs, are accelerating this trend. Nations that master the design and deployment of CBDCs can slash systemic costs, monitor risks in real time, and scale financial inclusion to unprecedented levels. China's ECNY, now the largest CBDC pilot in the world by transaction volume, is a powerful example of how state-driven infrastructure can become a competitive advantage. As these digital currencies grow in sophistication and reach, the countries that move fastest will set global standards. Venture capital and private equity play a vital role in this new economy as the growth organs of capitalism. Countries that provide robust exit opportunities, deep stock exchanges, strong legal protections, and pools of long-term investors create powerful networks that retain their top founders. In this environment, talent does not just arrive, it stays, builds, and compounds. The frontiers of bioengineering and longevity are expanding the very boundaries of economic productivity. Entrepreneurs who extend healthy lifespans push the edge of what is possible, enabling more productive years and reducing healthcare costs. The societies that attract and nurture this economy will enjoy extended demographic dividends, a larger, healthier, more innovative workforce for decades. Clean energy has become the spread, the margin of civilization itself. Global investment in energy is surpassing $3 trillion in 2024, with more than $2 trillion flowing into clean technologies. Countries that attract both engineers and capital for renewables are not merely reducing their domestic costs, they are capturing entire industrial supply chains. The move to clean energy is about far more than sustainability. It is about gaining a structural, long-term advantage. Nuclear fusion, once confined to PowerPoint presentations and science fiction, has achieved tangible scientific milestones. The ignition at the National Ignition Facility and multi-billion-dollar investment rounds in promising startups have signaled a colossal optionality. If fusion becomes commercially viable, the first countries to host operational plants will possess dense, cheap, and clean energy as a foundational advantage. Water and food are quickly becoming the new gold. Magnates who master water management, regenerative agriculture, and alternative proteins are providing nations with a shield against climate shocks. Where talent in water management and low-carbon agriculture flourishes, sovereignty and trade surpluses follow. In a warming, volatile world, these resources are the ultimate hedge. Tokenization of real-world assets, transforming real estate, carbon credits, and debt into digital tokens, unlocks liquidity and programmable governance. Countries that provide legal certainty for tokenized assets can repatriate capital and democratize funding, giving more people access to wealth and investment. The digital pipes for these assets are being laid now, and the first movers will control the flow. Stewards of natural resources and strategic lands are transforming physical stocks, fertile soil, critical minerals, into financial backing for their economies. When these are paired with robust data science and ESG certifications, they become premium investable assets, sought after by global capital. Influencers who think like chief financial officers are converting public attention into financial literacy, science education, and entrepreneurial drive. Where societies nurture these creators, the population gains an invisible yet powerful fuel. Risk literacy, the foundation of healthy markets. China stands at the forefront, running the world's largest CBDC trial, supporting advanced manufacturing ecosystems and investing heavily in AI. These moves are likely to keep China at the center of technological and financial depth, especially if the ECNY scales up for global cross-border use with partners in the Global South. The United States continues to lead in chips, cloud infrastructure, and venture capital, radiating wealth and innovation across the world. The synergy of hyperscale data centers, AI campuses, and entrepreneurial capital keeps the nation perched atop the S-curve of productivity. India, with its digital public infrastructure, demonstrates how state-led technology can build entire markets, from credit to insurance, creating domestic scale and attracting founders who are ready to play the long game. The European Union is turning sustainable finance regulation into a mark of quality. Those who can navigate its complex regulatory environment will access cheaper, more durable capital, transforming compliance into competitive advantage. Brazil, with its vast agricultural sector, accounting for roughly 23% of its GDP in 2024, and potential in bioeconomy, renewable energy, and carbon credits, can convert its natural wealth into financial sophistication. But this will require harmonized progress in regulation, logistics, and technical education. Individual profiles drive national outcomes. Visionaries in AI export software and services. Cloud managers build data centers that become innovation-free trade zones. Payment and CBDC architects lower economic friction. Regenerative agriculture experts create macro hedges against food inflation. Winning national strategies blend regulatory sandboxes for tokenization and CBDCs, Industrial policies for energy and fusion R&D, aggressive attraction of data centers, and the creation of fund of funds to nurture local venture capital. The result is a virtuous cycle where talent attracts capital, which in turn drives technology exports. But execution risks loom. AI bubbles and poorly allocated capital can leave behind idle data centers and expensive debt, eroding the returns that drive the cycle. Tokenization without real backing becomes nothing more than financial greenwashing. Poorly designed CBDCs could stifle banks and privacy unless mitigated with hybrid models, regulatory limits, and layered governance. Environmental and climate risks are not abstract. They are here now. Extreme heat and water scarcity already cost hundreds of billions each year. Agriculture that fails to adapt will see its productivity and reputation decline. Durable growth will require efficient water use, low-carbon farming, and auditable ESG metrics. Countries and leaders who internalize these costs create compounded advantages. If your aim is to win the century, not just the quarter, design your portfolio and your projects at the intersection of talent, digital infrastructure, programmable finance, and true sustainability. Together, we can chart a bespoke country-by-country and profile-by-profile action map covering AI, digital infrastructure, clean energy, tokenization, and regenerative agriculture, with quarterly targets and risk indicators. Are you ready to start drawing this plan? Let's build your future, one smart, sustainable decision at a time.